Hey guys, what is going on? Welcome back to the portfolio. Welcome back to the channel. Great to have everyone back on the YouTube series here. Immensely appreciate all of the support from the viewers and all the subscribers on the channel. For today's video, I thought I'd quickly go through how to roll an option. I recently had to do that on the portfolio, and there's been a few viewers asking exactly what that entails. So I thought for this video, I'd go through rolling an option. First of all, let's take a quick look at the portfolio. As you can see here, a very strong day of trading. The portfolio is now over $790,000, 7,500, 1% in active hours trading, additional $224, 0.03% in after hours trading, and you can see the incredible rebound this past week, $117,000, 17.44% of the overall portfolio, and that follows a very dramatic decrease in the value of the portfolio. You can see here, actually 1 month it is down $1,300, and that is because of this very strong performance here, getting up to 858, 374 momentarily, but again dropping down over the past 1 month. I am still up over the past 3 months at 37,000, but it was very nice to get up above $800,000 at least momentarily. So let's go ahead and take a look at Tesla Motor Company. These are all the options that will be pending for this Friday. You can see the Tesla 950 call. This is the stock. These are the contracts I had to roll forward. You can see here position -4 contracts. Let's go ahead and take a look at Tesla. You can see here very strong performance, up at one point over $1,100. Actually, for the majority of the day today, it did drop here before closing, just under 1,100. You can see in the middle, I have a very large holding, 400 shares, market value $438,800. And if you take a look at the average cost there, $10.22. So we'll have to keep that in mind when we take a look at rolling options forward, rolling them forward, and then also rolling them up, hopefully up to at least $10.22. Let's take a look at the history. I just want to quickly review that prior rolling forward of the options. You can see here I bought back the options 950 call by 1223. I had to buy those back for $46,000. And then I rolled forward to 1231, same strike price, and then sold those for $47,600. So it did make $1,600 on the trade. But again, I had to roll the stock forward, and hopefully I can roll it up here as well. Just for some terminology, so rolling out, this is rolling forward, buying to close an existing covered call at the same time you are selling another covered call on the same stock with the same strike price, but at a later date. So for example, this last trade, 1223 to 1231. So rolling out, and then if you want to roll up, that's simply doing the same thing, but now picking a higher strike price. So buying to close an existing covered call, at the same time buying another covered call on the same stock with the same expiration date, but with a higher strike price. So what I'm trying to do is rolling out, moving forward, and then rolling up, the price of the strike price going up as well. Alternatively, you can also roll down, buying to close an existing covered call, and then selling another covered call, same stock with the same expiration date at a lower strike price. So you can also roll down and out as well, doing the same thing as what I'm trying to do as rolling up and out, but instead of picking a strike price that's higher, you simply pick a strike price that is lower. So let's go ahead and take a look at all of the trades here. So again, trade options. December 31st is on Friday. I do have 4 calls currently. So if we go to buy call, so you can do buy or sell, call or put. Let's do buy call, and then go down to 950. That is where I have the current contracts. And we'll have to take a look at a few of the numbers here. You can see -4 by 950. I have 4 calls that have been sold off. You can see the current price, if we go buy, is $145. If I do 4 contracts, you'll see I have to spend $58,040 to buy back those contracts. If we do that, you can see on the bottom of the screen, I'm paying $58,040 to buy back 4 open contracts, which will release collateral and remove your obligation to sell 400 shares of Tesla for $950 each. So the collateral are the stocks I have in the portfolio, 400 shares of Tesla. So if I do this, I buy back those contracts, and I no longer have to sell Tesla at $950, but I do lose $58,040 in the transaction, $145.10 per contract. So what I would do in this particular instance is now move forward. So I can go to January 7th. So I'm rolling out. I'm rolling forward. If I go down to the same strike price, you can see I can now go to sell call, and I can sell these off for 150.68. So again, I had to buy back at 145.10. I can now make money by selling these off at 150.68. So 4 contracts, you can see I'll now receive 60,272. So I'll actually make money rolling this forward. Alternatively, what I can do is both roll it forward and then I can roll it up. So let's say I want to go up to, for example, 955. So now I would have to sell the stock at 955. If I go sell, I'm going to sell them off at 146.20. 4 contracts, 58,480, which is still above the 58,040. So I'll be moving forward, moving the price up. So now I can sell at 955 instead of 950 as prior, and I'll still make a little bit of income, spending 58,040 and making $58,480. So for this one, I'd be rolling out and rolling up, or rolling up and rolling out. And you can continue to do this as far in the future as you want. Let's say, for example, I want to get all the way back up to the price that I paid, or the average price of 1022. Essentially, what I'll have to do is then roll this forward. So I can roll it forward to January 14th. Let's say I want to do the same price at 950. You can see I'll make a lot more income at that particular price. But again, if the stock's price stays above 950, I'll have to sell off at 950 at that point. So for 950 here, it'll be 156.95 per contract. If I do 4 contracts, now I make 62,780. Again, having to spend 58,040 to buy it back. But let's say I want to try to break even with the price I paid for the stock. I can go all the way up to 1022, or the closest price of that, 1025, $1,025. You can see it's at $99.45. That's well below the price of 145.10 that I had to buy that prior contract back at. If I go sell 4 contracts, you can see I'll make $39,780. But again, remember, I had to buy those contracts back prior for $58,040. So I want to at least get to that price or above it. So what I can do is continue to roll forward. January 21st, we'll go back to the price $1,025. Again, we'll have to get up to 145.10. You can see here it's still 107.80 for that. So continue to roll forward. Again, the same strike price as which I bought the stock for, $1,025. You can see here now it's 119.48. Continue to roll forward. Again, $1,025. You can see it's 130.28, getting closer. Let's go out to March. Let's go out to April, actually, see where the price of the stock is. Again, let's go back to $1,025 to see where we are at. And you can see currently now it's 184.85, well above the 145.10. So I could go ahead and sell off at that point. 4 contracts, I'll make $73,940. So I'll be selling off at a price at $10.25, higher than the price I bought the stock for at $10.22. And I'll also make money. Again, I'll make $73,940 with this particular set of contracts, and I had to buy those back prior again for $58,040. So again, that's how you can roll forward and roll up. So that's what I've been doing with Tesla. Again, my average cost, you can see, is $1022.50, $1,022.50. I had contracts where I would have to sell at $950, so I'd lose money on each of those contracts. I rolled forward, and then hopefully at some point I can start rolling up to $1022. So just wanted to quickly go through that. I know there's quite a few questions on the portfolio, what I'm actually doing by rolling a stock forward. A lot of you guys, again, let's go back to the history, saw those very large contract trades, 46,000 and 47,600. A lot of questions what I was doing there. And that's what I'm doing. I'm rolling forward so I don't have to sell off at $950, and then hopefully at some point I can roll up, get back to my price of $1022.50. $10.25 would be the closest contract to that. So again, just quickly wanted to go through that. If you guys have any questions about that, please let me know in the comment threads down below, and I'll do my best to try to answer those questions. If not, I'll do an updated video going through all of the questions you guys have on this video. So just wanted to go through that. With that, I'll end the video. Again, if you guys enjoy the video series, if you guys enjoy all of the videos on the YouTube channel, please let me know. Please like, subscribe. If you guys have a particular video idea, please let me know in the comment threads as well down below, and I'll do my best to get a video for you guys. So until next video, we'll see you then.